everybody? Today we are going to do a macro level technical analysis on the stock market. What we have here in front of us is a weekly chart of VIX. The VIX represents the fear in the market. As you can see, the fear in the market is pretty low. It's very low, and it also inverses the SPY. Now I'm bringing up the VIX because I do think it's worth noting that the VIX is very close to having a death cross. So as you can see, it's trading below all our moving averages. So I'm going to move my 13, 5, and my 20. I'm going to leave my 50-day and my 200-day. Okay, you can see the 50-day is getting close to the 200-day. That's very, very bearish stuff. All right. Now I want to mention the last time we had the death cross on the VIX was right here on this day, January 3rd, 2007. Okay, you can see the 50-day crossing below the 200-day. The 200-day is the purple line, all right? So January 3rd, 2017 was the last time the VIX had a death cross. Now we move to the SPY. Here it is, January 3rd, 2017. This is when VIX had a death cross, bearish for the VIX, but bullish for the SPY. And as you can see, at the time, SPY was already moving in a strong bull market. VIX had the death cross on this day, and SPY just continued to go up. Mind you, this is a weekly chart. So each of these candles represent weeks. A week, okay? So as you can see, that's a lot of green weeks for the SPY. Alright, so that's what happened the last time VIX had a death cross. And today, well, this week, we are very close to the VIX having a death cross again. Now we go to current events. As you can see, this is this past week. This candle right here, this past week had a very, very greenish week. Now we are kind of overextended, okay? This is not the most overextended thing, because if it was, here's this white area, the upper Bollinger Band here, and the price action will be above the upper Bollinger Band, okay? If it was overextended. Right now it's not overextended, but it's a little extended because we didn't get our usual bounce off the 5-day moving average, especially on the weekly chart. Okay, that's where I usually consider where the critical support level for the week is. Okay, so this week, the 5-day moving average was at 439.64. We never got that bounce off of there. All right, so this coming week, I would like to see if we will get a bounce from there. Okay, as you can see, this line right here, boom. That line right there, that's our resistant line. Okay, as you can see, SPY has moved above our resistant line. It closed above it. So we'll definitely be watching if this is going to be a false breakout or will it continue. It could be a bullish breakout. Now, of course, I got this area of, all my old viewers know what I'm about to say. All my new viewers, this is the area of liquidity. Okay, you guys called me the CEO of the area of liquidity in my last video. I take that as a compliment, guys, because I try to be consistent with the information that I give you guys, because it's the truth. All right, we want to watch out for these market movers because they stay manipulating the market. Okay, do they always manipulate it? No, but they definitely try to set us up like combinations in a boxing match. They set us up with that combination, and then boom, they take us out with that knockout blow. So we could be, the market makers could be going for that knockout blow right now, okay, and taking out all the stop losses. So as you can see, it's going up. So this week, I want you guys to watch for a potential false breakout, okay? The support level for this resistance right here would be around 445.90. All right, it's a pretty high resistance, guys. A support level, excuse me, because it's a support level because it closed above, okay, this strong resistant level that's been around since April is now officially a support level, okay? So definitely watch out. If you're going to short the market, this is the area you guys want to short the market, okay? I don't recommend you shorting the market. Let's keep it 100. I'm gonna be frank. I don't recommend shorting the market. Why? Because we are in a strong bull market. Don't be a bear in a bull market. But if you are stubborn and you want to short the market, you might as well short it from the area of what? The area of liquidity. All my real original long viewing viewers know about the area of liquidity. Mind you, I've only been doing YouTube for 4 months, okay? All right, so to support critical support level is 439.64. There's a chance that because it's a new week, these moving average will slope up. So 439.64 to 440 is critical support level. All right, below that is we got our 13-day moving average 430.07. So okay, so 430 to 430.50, that's another support level. The 20-day moving average, probably the most important and critical of our critical support level, will be 424.65 to the 425 range. Okay, guys, please remember those levels. Write it down somewhere. Those are the areas you would want to look for buying opportunities if you are bullish on the SPY. Okay, this is a strong bull market. This is a weekly chart. As you can see, it's a strong bull market. Each candle represents a week. And just because we are at a resistant level and trading around it doesn't mean it's time to short it. We got to see what's going on, all right? So, of course, take some risks. So I did say this orange area right here is around the area where you would probably want to short, because these is where potential stop losses are set up. So we'll definitely watch it. If SPY gets above 449, I recommend you cutting your loss, but at the same time, do what you want, because I will not look to short this market. I will look for buying opportunities. Okay, so hopefully, fingers crossed, SPY can pull back down to one of my critical support levels, so I can look for entry. And if it doesn't fall to any of my critical support level where I am comfortable entering, guess what? I am not entering. I am very picky. I am a spoiled brat when it comes to my entries and as well as my exits. Okay, because I tell you guys, I like to enter just below my support level. So if my support level is at 439.64 to the 440 range, obviously I will be looking to enter 50 cents to $2 below that. All right, do I always get it? No, I don't always get it. And if I don't get it, I am not going to force it. But if it does fall 50 cents to $2 below my support level, that's the area I will look. And if it falls more than $2 to $3, then guess what? Cut your loss. I'll take my small losses all day, because the very next day I will make it back. All right? Because if you don't cut your loss and keep them small and they get really big, it's going to be very, very, very hard to make a comeback. Okay? But if you keep your losses small, it's okay to be wrong. All right, you don't want to trade with your ego. Don't be egotistical when you trade. It's okay to be wrong. It's okay to be wrong in life. We just got to learn and do better for the next time around, okay? So, with that being said, definitely watch these critical support levels. This is a bull market, so I'll be looking for buying opportunities. And I certainly do not recommend buying SPY now. This is the tippity tip of the tippest tip bull market I've ever seen. And we, as beat the market traders, you guys are beat the market traders now if you've been watching my video for more than 3 months. Okay, if not, you'll get there. Hopefully you guys get there, because I want you guys to stay with me on this journey, you know. But beat the market traders, we beat the market by buying at the dip. That's right, the dip of a bull market. Okay, when it falls to one of our support level. Of course, if it's a bear market, we just reverse the rules around. Okay, we don't, in a bear market, we don't buy. Okay, we look for selling opportunities, and we look to do it around this resistant level, or we look for shorting opportunities. If you guys are a little confused about the term selling, right, you identify the resistant level, and then you try to enter around there, bend to the downside. Same thing we do with the support levels. Okay, all right, same principle, I just reverse it. All right, so that's SPY. Definitely watch. We are still in a bull market. I don't recommend becoming a bear just yet, because this is not a bear market. I recommend looking for buying opportunities. All right, in a bull market, the probability of us being profitable, if you stay a bull in a bull market, it's more. All right, have a probability mindset. Look at that. You look at it, it's more likely to go up in a bull market. Yes, we have time where it go down, but do the fraction, guys. What out of what times is SPY likely to go down? The probability and the percentage-wise of SPY going down is far less than SPY going up. So let's do what's the high probability, so we can have a higher probability of making money. How many times did I say the word probability? If you guys know, comment down below how many times I said the word probability. All right. So that's SPY. Watch the support level. Moving on to QQQ Triple Q is also in a strong bull market. This is a weekly chart as well. And unlike SPY, we did get that nice, beautiful dip. Look how many times it happened. 3 weeks in a row. And that happens a lot. Happens a lot, guys. You see it there, you see it there. It jumps just a little bit below our support levels. And it goes right back up. Okay, so what's the support level? We got 365.45. That's what the 5-day moving average is. 365.45. Next support level, 352 6 cents. And then the 20-day moving average is the most critical, is 345.92. Okay, watch this area. All right, you guys see it. Okay, and of course we got the 50-day moving average all the way down there at 319.33. Okay, those are the levels we want to watch. In a strong bull market, we get lots of bounces off the 5-day moving average. So if there's a time, sometime during the week, where Triple Q drops below the 5-day moving average of the weekly, make sure you check. I use TraderView.com. It's free to use. Don't get bearish. Look for buying opportunities, okay? And obviously have a nice stop loss. All right, I got this indicator right here, the ATR. So this is the RSI. I don't really use it too much. It's the dummy indicator. No offense, but most retail traders use the RSI and most retail traders lose. So I don't put too much weight into the RSI. But check out this ATR. Most people use the ATR to exit their trades. Guess what? I use the ATR to enter my trades. I'm a damn madman when it comes to this stuff. Oh well, I don't know. I'm just being sarcastic, guys. But I just want you to understand that conventional methods will not get us profitable in this market. Excuse me, this market. All right. So definitely watch the support level. You guys can. You don't have to take what I say about the ATR serious, but that's just what I do. I use it to look for entries, while most retail traders are using it for exits. Okay, I digress. So I'm gonna say this one more time. 365.45 is a critical support level for Triple Q, and then below that is 352, and then below that is 345.92. Okay, definitely watch those three levels. Below the 20-day moving average, which is 345.92. If Triple Q is trading below that, I'm very, very bearish. Okay, keep in mind, it has to close below that more than one time. All right, but looking at this weekly chart from a macro level, guys, it's a strong bull market. And like I said with SPY, stay a bull in the bull market. All right, moving on to ARKK. ARKK, this is a weekly chart of ARKK. Now, ARKK, you got these moving averages squeezing, you know, getting tangled up. That's telling me sideways action. All right, we have a critical support level at 118.54 and then 117.85. Okay, so that's where the 20 and the 50-day moving average is. Okay, so we want to see ARKK stay above those levels. Okay, now I'm also seeing a potential inverse head and shoulders pattern. This is the left shoulder, this is the head, this is potentially the right shoulder. Now inverted head and shoulder patterns are usually bullish patterns. Okay, so definitely want to watch that if it'll play out. All right, we did have this strong support level right here. Okay, they set up the strong support level, and then what did they do? Pushed it below, took out the areas of liquidity. All right, areas of liquidity. I'm gonna start saying AOL because area of liquidity is a mouthful, but then again, AOL used to be a messenger thing. People my age and older will probably think of that. All the young kids will probably like, what's AOL? Anyways, so they took out the area of liquidity here and they pushed it up. This could have been a higher low buying opportunity. We'll see, okay? But definitely keep your eyes on 117.85. That's the most critical support level. If ARKK starts closing above that level, mind you, this is a weekly chart, so we need more than 1 week of closing below that level, it will start looking bearish again. And this could have actually been a lower high. Let's hope it's not, but if it is, we're not going to get our feelings hurt, okay? We're going to stay objective because we can make money to the downside too as well, guys. Okay? But like I said, if ARKK can break the neckline, I'm saying this is the neckline around 131, 132 range, then maybe a 142 price target can get hit and maybe go back to all-time high, which is at 159, 160 range. Okay, so definitely watch out for that critical support level, 117.85 for RK. All right, guys, so that's it for this technical analysis for the stock market. I'm going to release another video for the crypto market, a few crypto coins that I like: Bitcoin, Ethereum Classic, Dogecoin, and Atom. I'm going to cover that in another video. So if you're interested, definitely check that out. Other than that, I hope this video help keep you guys calm in this crazy market. I'll see you guys really soon. Continue to beat this market.